Good evening, everyone. It is Thursday night, and as you know, on Thursday nights, the Millionaire Ladies Mob are live. And here we are. Uh, Today, this month is a special month for us because it's Financial Literacy Month. So you will see more of us. You should have already been seeing more of us over the last couple of days because our passion is to ensure that our community receives the information so that they can receive financial literacy information so that they can make good decisions when it comes to their money. Financially literate individuals make better decisions than financially illiterate individuals, and they are better able to avoid pitfalls. It's never too late because this is not taught anywhere, and that's why it's our passion to continue to educate the community. As always, I have my Millionaire Ladies Mob sisters with me. Saran, why don't you go ahead and introduce yourself? Tell them a little bit about where you are, who you are, and how to get in touch with you.
I'm your girl, Saran. I can be reached at Saran10K, but again, a part of the trio here. We help eliminate debt, create income you can't outlive, retirement planning, and you name it. But again, we're here going live. I've been going live a couple days as well with Carmen. Aaliyah's going to go live too. This is me peer pressuring her. But we are excited to get you the education that you need because the more you know, the better decisions you can make for yourself and for your future generations. So I'm excited to be here talking to our tax planner, tax extraordinaire. I've had the benefit of working with her, and I'm excited to have her here with us today.
All
Wonderful.
righty, Aaliyah.
Hey, everybody. I'm Aaliyah Sherrod. You can reach me at Aaliyah10K. I'm out here in Southern California. It is still daylight out here, so it's wonderful. The weather is beautiful now. Thank you so much for joining us because it's tax time, it's tax season, and we want to know some strategies that can help us reduce our tax liability. So that's why I'm excited about this episode. And if you are listening, and watching, please share, like the video, share it with those business owners that you know. We all need tips and we can't hear it enough. So thank you for joining us, Kimberly Ann, and we appreciate your time because we know you're busy. Thank you so much.
That's right. So Kimberly Ann is my personal mentor when it comes to taxes. As many of you know, I also do taxes as a part of my financial services business, and I have the benefit of working with Kimberly Ann. Kimberly Ann is a phenomenal businesswoman. She is an enrolled agent with the IRS. What does that mean? She can speak for you. She can represent you in front of the IRS. The only person that has any more leeway, I think, is a tax attorney. I think I said that right. But she is right there at the top to represent for you. Now, hopefully you don't need her services because they really tax, they cost. But if you do need her services, you can get in touch with her. She's going to tell us how to get in touch with her. She's a mom. She's a phenomenal mentor. She runs several businesses, and I'm going to let her talk a little bit about some of those businesses. And then we're going to jump in just asking her questions today, not only about business owners, but if you're a business owner, tune in. But we're also going to talk about regular people because tax planning or understanding a little bit about doing your taxes is part of being financial literate. We want to reduce the amount of money that we give Uncle Sam. We want to divorce that man, get him out of our lives. We want to reduce that and we want to increase our wealth. And every dollar we don't give to him, we can put towards our wealth. So, Kimberly Ann, again, welcome. Thank you. We are in the thick of the tax season. So we really appreciate you joining us.
Thank you for extending the invite to me. I am going to try and not sound tongue twisted because it is the thick and thick of it, and I am exhausted to say the least. So as everyone mentioned, my name is Kimberly Ann Chambers. I am the owner of Dollars and Cents Tax and Accounting Services. Um, I'm My experience in taxes spans over 30 years. I've been in and around taxes since I was 13. My father was a former IRS auditor. So to say the least, I know taxes from diapers. I know taxes from diapers, basically. So I jumped in and took over his business in 2015. He had rapid onset of Alzheimer's. And as a result, I took his last remaining clients and grew the business from there. I ran from taxes, to tell you the truth. You know, as I'm graduating, going to college, my father's like, do taxes. I went for an accounting degree. I tried to stay far from taxes. I was done. Most I want to do is input. That's it. But it drew me back once he got ill, and I re-engaged and found a new love of taxes again. I liked educating people, you know, really getting them to know what they did throughout the year that provided the income they received or the outcome they received. And then it's been onward and upward from there. I became an enrolled agent, as Carmen said. I also have a niche tax and accounting business that's niche to cannabis, to cannabis, legal cannabis businesses as well. And I also have a virtual assistant service that provides niche services in tax and accounting, of course, as well. So those are the broad scope of my businesses, but we're here today to talk about taxes and tax planning, right? Oftentimes when people talk, I do have some talking points, so I just want to share some things I thought of in speaking to you guys, the millionaire ladies. I definitely have some ideas around some tax plan strategies that would fit you. Oftentimes when you hear people talk about tax planning, they often talk to the small business owner or businesses, but we really need to get to how can we save as individuals, right? How can we make a difference on our tax return as well? What I do want to introduce you guys to a concept is that taxes are a money making issue. If you weren't making money, they couldn't tax it. So, you know,
That
you
part.
are, yeah, you are profitable. I
Yeah, you
want
don't have to like it, but it can happen.
Yes. And what it is that, you know, we often have the mindset we don't want to pay taxes. Nobody wants to pay taxes. But in the true concept of it, you are a profitable person or entrepreneur if you have to pay taxes. So when you don't make any money, oftentimes we want to bring it to zero or bring it to negative so we get back a credit. That's not the mindset you want. The key is to tax plan based on your goal. You have to be very clear on your goal. Talk to your tax person. Be very clear on your goals for the year, because saving in taxes, which we can plan all day and get you to that zero or get you to that negative. But do you have a goal of buying a home this year? Do you have a goal of if you are not making money, if you're at a zero income, guess what? You're not going to qualify for a loan. So tax savings sometimes do not coincide with certain goals you have. So you have to be very clear on what you plan to do for the year as well. So I want to also talk about what we often experience as people, as women, as families, is a concept called lifestyle inflation. That concept is that when you tend to make more money, you tend to spend more.
Oh,
Your
yeah.
expenses grow. It's the true essence of more money, more problems, right?
Biggie
And
said it. Biggie
More
said it
money,
right.
no problems.
Biggie said it. So, with that being said, you know, oftentimes lifestyle inflation happens for a number of reasons. we fall in love, we join together, we have kids, you know, we make more money. That union costs more money, but then we get the kids, we got more mouths to feed, right? You know, you get raises at your job. You get raises at your job. Okay, I don't want to drive a Honda anymore. I want to drive a Mercedes. You know, that type of concept happened. A lifestyle inflation event was COVID. The world shut down. We were home, but we were getting a lot of government money and didn't know. A lot of people had itchy palms and didn't know what to do with it. So that was one big lifestyle inflation event. And unfortunately, some people are experiencing the repercussions of that right now.
Yeah.
So, how can tax planning help that? Let's think about it. Oftentimes, there are deductions and credits we are not privy to, like the layperson is not privy to, and we can be strategic about utilizing throughout the year and even at tax time. A couple of those strategies I want to introduce you to. Investment strategies. You avoid short-term capital gains. Capital gains occurs when you have investment that you sell, you do something with, you think about stocks, you think about property, you know, you're not holding it for the long term. It's a higher capital gain when it's less than a year. So if you could be strategic in your choices, oftentimes we buy a property with no intention. It was a great property to invest into, no intention of keeping it. Maybe strategically plan, at least hold it for a year before you flip it. You know, those type of things. There's also stocks that you can invest into that have low turnover or minimal dividends. You want to minimize your tax liability because those dividends that get paid out are income to you. So just because you have the money doesn't mean you have to invest into it. Just because it's a trend like Dogecoin, you know, doesn't mean you have to run and jump into it.
Well, let me ask you a quick question about that because I'm into buying high dividend stocks personally, right? And so because I get paid a dividend, right? And so you're saying get the lower paying one. So it's like, what's the trade-off if I'm trying to make money with the stocks? Because I hear you saying to lower your taxes, but if I'm trying to make money, like you said, I want to make money with all my investments. I want to be able to be Warren Buffett, who his dividends is paying him 184 million. Now, I mean, that's not nothing to sneeze at, right?
Right.
So if I start buying low dividend stocks, and I'm going to see a lower return on my money. And we always talk about trying to get a return greater than the inflation rate, right? I looked at it the other day. It's like 6% now. It's going down. It was going down fast. Now it's going down a little bit slower. So, you know, what would be something, you know, low dividend versus high dividend? Because I'm looking for high dividend. You know.
So a strategy you could use to combat that. And again, that goes back to your goals. Now you clearly are like, I want the money. I want to be Warren Buffett. I want these dividends to pay me a whole other income, you know? So and the next thing I was going to talk about is tax loss harvesting, meaning that sell a losing investment to offset something that's a higher gain. So if you're invested in something, and like people that play stocks, if you watch it like that and you know some are going to be doing good and you have a stock that's losing, you take the loss in order to combat the ones that you sell that off to take advantage of the loss to go against the high income.
Right.
So those are strategies you would employ in order to manage that. Because we hear about the 184,000 or whatever the dividends are paying him. We don't know about what losses he's taking advantage of.
Correct. They never tell us the whole story. Our billionaires are great at telling us how we can be like them, but we only get part of the story in their books, videos, and tapes. And so, that's why it's good that we have people who are on the ground doing it. Because I always would tell people, and I think I laughed about this with Carmen and Leah. I'm like, I want to know Trump's tax strategy. I don't care about the rest of the stuff he got going. The rest of it, we can label it whatever. I want to know how I can do some of the tax things that he's doing so I can reduce what I'm paying out and keep more.
And oftentimes, when you look at those situations and when you really think about it, they harp on, okay, he paid zero taxes or he got back a refund, and somebody like Trump. They don't tell you what happened in state, though. Oftentimes, when that happens, some of the credits that they got to apply, it doesn't work in state because state want their paper.
Right.
So
right.
he might have saved a lot, but he might have conversely paid decently in the state.
Right. And don't get me wrong, I know somebody like that and people at those levels, they have very complex tax strategies, right? And we're talking to our millionaire women who are, our millionaire entrepreneurs or future millionaire entrepreneurs who are trying to figure out, what are the things that we can do to kind of get smarter with our taxes. So
absolutely. So we are speaking to the heart of the people that have the millionaire mindset, or they are in their early millionaire stage. So those are the people we are trying to give them some small tips and tricks that they can apply now, right?
So let me ask a question. So what you recommend is that when you're doing, you don't just, I know a lot of people that I do my own taxes. I'm going to go to TurboTax and do this, but you really should sit down and think with a professional and talk about your goals, if they're long-term or short-term.
Yearly.
Okay, every year, and figure out where you went wrong last year, because I went wrong last year on a whole lot of levels, and I end up paying a lot of taxes. However, every year I should be sitting down with my tax professional saying, this is my goal this year. You buy, you sell, you do this, you do that. And one of the main things that I'm hearing is that we need to clearly define what our goals are, short, long term, 5, 10, whatever it is. And then sit down with our tax professional, and they should help us with our strategy so that we can either reduce taxes or whatever the goal is. That's what I'm hearing.
Absolutely.
I love that.
Absolutely.
Not right now, because taxes are due April 18th. We're putting it in May.
Not now. Not now.
Well, the good thing is
up we can do now.
Right. But the good thing is taxes are due April 18th, but don't let that scare you, because you can do an extension and you have another 4 months. Everybody does have another 4 months until October for you to be able to, if you're now listening to us and you're thinking, oh my God, this is a great idea, but I can't do it right now because it's the 18th, it's going to be around the corner. And most tax professionals are going to be booked up right now. But we can, there are things that we can do, such as filing an extension and sitting down with that tax professional for them to help you. And like, back to a little bit what Saran was talking about some of the strategies that she uses based on her goals. Most of the things, the high dividend stocks, if you're getting paid high dividend stocks and your goal is to get up that paper, you're going to be holding on to those. So capital gains on them later on is different than if you sold it within that first year, as Kimberly and mentioned to you. And then I don't want this to go over anyone's head who was listening. Many of us, we don't want to pay taxes. I agree. Our millionaire ladies, we specialize in helping you to reduce your taxes legally, because tax avoidance is not a crime, but tax evasion is a crime. But we have strategies to help you put away that money or put that money someplace so that you are not paying as much taxes, or when you're accessing it tax free. So so you still have time to, in the middle of the conversation, I'm going to let Kimberly Ann tell you how you can get in touch with her if you fall into one of those categories that we just talked about. Because last week we totally forgot to do that. So tell us, Kimberly Ann, how can one get in touch with you? Whether they're listening right now or they catch it on the replay, how can they get in touch with you?
Well, you could definitely visit my website, which is www.dactaxact.com. I'm going to give you the grandfather baby one because it's too many to mention, right? Or you can give a call to my company at 888-611-1040. So those are the two ways that you can get in touch with me, or you can email me at kchambers@dactaxact.com.
Awesome. Awesome. Do we need her to repeat that, Saran? I think you're trying to type it in.
I'm typing it. I just pulled up the website from when I used it. So
Okay.
you're going way too fast for me. I just pulled up my bookmark.
No problem. So I do want to get to the items I thought about, especially for us individuals and us women, millionaire ladies, right? So we went over investment strategies. There's also retirement tax strategies. You have IRA conversions, converting traditional to Roth. Roth, you pay up front the taxes. So when you take it out later, guess what? It's tax free. So those are one. Another one I would tell you is medical, not really retirement. That's the main retirement one. And you have up to $6,000 a year to invest in your Roth. That's another strategy. And husband and wife can both do $6,000 each. So it's not just for the couple. Another strategy I wanted to go over was medical tax strategies. You guys have the advantage of having things like a health savings account at work. You invest into those health savings account, and the withdrawals, you invest tax-free dollars. The tax-free dollars can be utilized for expenses such as, any medical expenses, your children's braces, those type of things, to offset higher medical expenses. Some of you, and with that being said, there's a medical expense deduction that you can itemize for if you qualify. With that being said, the itemized deduction is 7.5% of your adjusted gross income. So you have to exceed the standard deduction. So you don't get both. All the time, the standard deduction has doubled since 2018, and it keeps going up. And you could either have standard deduction or itemized deduction. Under itemized deduction, that's where you get the mortgage interest credit, you get your real estate taxes, you get a credit for taxes, you get medical expenses that you pay out of pocket, you get your charitable deductions. In combination, if that exceeds standard deduction, then this credit can grow and grow because you're capped at standard deduction. But if you have itemized expenses that exceed that, it's going to go for the best deduction for you. So if it applies, go ahead.
Quick question. Got my friend here in my text messages here. I guess they don't want to post it up there. Who decides medical stuff? So can they use, like, because they did some weight loss surgery or some hair restoration procedure, can those count as medical?
If they were medically necessary. Meaning if the doctor said that hair restoration, like, it affected your psyche and it was medically necessary. Like some people have where they have no hair, no eyebrows, no hair, and they get the hair restoration. It's possible. If it's medically necessary, it can be. Weight loss, medically necessary. If some of the costs, usually it's covered, and then you might fall into some extended costs, out of pocket costs that you have to pay. If it was medically necessary, it's deductible.
Okay. Um, there was something else I was going to say. Oh, you mentioned about the Roth uh, account, and we believe in the Roth account as well. We also talk about a Roth on steroids, which is what we help people to do, and that also helps to save on taxes in the long term because you pay taxes now. And then you put your money into a safe place where it grows, and you do not lose any of your money. You cannot lose any of your principal at all. And then it then works in other ways for you, which is why we call it the Roth on steroids. So the Roth is it definitely important, as Kimberly Ann told you. It is capped. I think 2023 is going up a little bit more, but for us, we have the strategy where it's not capped. So if you made $100,000, or you have $100,000 that you want to put someplace, and you want to make sure that $100,000 is not going to go down, then we also have that such a strategy where you pay taxes up front. And then, because many of us, we get caught in that, I'm going to pay taxes later, right? But right now, we're in the lowest tax ever. If you want to go back and look at it, we are paying low, although these taxes are high, where the taxes are low compared to what people used to have to pay before. And so we say, would you rather pay taxes on the seed, or would you rather pay taxes on the harvest? Right?
Mhm.
And if you bought $1 seed, and you pay 10 cents taxes, would you rather pay taxes now, or wait until that harvest is $100 and pay taxes? And so
Mhm.
that's also another way. We are not even tax accountants, but we can help you with that. Although I
Mhm.
told you I do taxes, you can contact me. Go ahead.
Mhm. I had one more thing to say. What you were saying about healthcare. So that's my specialty, is helping people with healthcare. But I never, I mean, I have an HSA myself because I know the benefits of it, but I don't really get into that with my customers. But that's a very good way to help someone with their taxable income.
Yes.
So these are things that you're practical, everyday things. Everybody has health insurance. Well, maybe you could switch it to an HSA type of health insurance where you can do the savings account along with your medical and say, that is such, I never even talk to my clients about it. And I have
It's a
one.
strategy. It's definitely a strategy that's applicable to just us, right? Us
Hmm.
little that might not be the who you
The
mentioned
norm.
before. The rich, super rich, the Trumps,
The Warren
This is
Buffets.
yeah, we are definitely these are all strategies that we can use today. We
Yeah.
could really use and apply today. So even with that, I wanted to mention back to your point about the retirement tax savings. As long as you're planting a seed, right? The seed is
Yeah.
important. The fact that you are planning towards your retirement and you are saving towards your retirement, that's ideal. That's what we want. But what's optimal is Roth is the better of the two. But as long as you have that mindset, I applaud anyone that is already thinking this way because retirement tax savings are important. They're important as well. So,
I have a question also. So
mhm,
would you when you're sitting down with someone and they have a 401k at their job, would you recommend, and sometimes, that they do it under the Roth? Because I have that option at my office
yeah,
where they
Hmm.
can do the Roth,
yeah,
and that's so that money is taxed and I put it away. Okay, I never even thought about it. Oh my
yep,
goodness.
yep. But
It's
you know
so
what? How they educate you at work too, because they're not taxed. They're just thinking, okay, put away something for retirement.
Yeah.
But to tell you the ideal situation, they're not going to know. They're going to
uh,
tell you, oh, you're going to pay tax on the money going in, and all right, tax is a curse word, right? Tax is
yeah.
already a curse word. You're like, okay, no, it can come out later. Let me just put something in there. But
Mhm.
ideally, the Roth is a better option.
What
And
about
a lot
the
of
company match? What happens to the match? Does
The
that's
match, I think, is I think the match depends on the employer
Right.
and how they contributed, whether it's tax. But I was going to add to what you were saying, Aaliyah, because one of the things that, and we talk to people about this, about redirecting some of those funds into something where you pay tax now and don't wait to the future. And one of the things that I find is that, like Kimberly Ann was saying, when you go to the employer financial trainings, they told the party line, they only tell you to do the contributions before tax. And now there's a law coming out, and we talked about it a couple of weeks ago, Secure Act, where it's going to require you to contribute. And I know here, I'm in the DC area, a lot of federal government employees, they are required to contribute a certain amount, and it goes up each year. And so, but they're making people do it before tax. Well, the catch is that taxes will probably be higher in the future. So it's good that they have the money, but if now you're paying 40, 60, 70% on it, when you go to take it out, it becomes a challenge. So that becomes a part of the retirement tax planning, right? Right now we're talking year over year, but we also have to really think about the retirement tax planning long term. And that's one of the things that, I think that we can agree on, is that really figuring out, like, what's this tax strategy when it comes out? Because unfortunately, I run into a lot of people who are 70 and 80 now,
I have to pay a tax bill.
And they got to pay a tax bill on their retirement, and they have to take required minimum distributions. They got to pay taxes on their Social Security. They got to pay taxes on the money they got to take out on the required minimum distribution. Mm-hmm. And it just becomes a cycle. And then they don't end up with the amount of money they thought they had.
That's right. That's right.
Mm-hmm. And I say all that to say, because a lot of times we take for granted us, and I'll talk to us very educated, talented women that we are. And there's so many women like this that are watching this live or going to watch the replay, is that when we get 70 and 80, nothing is not in our control. It doesn't matter. Just by mere fact of aging, our cognitive abilities change.
Yeah.
Period. And they can, and we can do things to make sure that we stay kind of sharp. But the reality is, they're going to change. 70, 80, 90, they change. Doesn't mean that you're a bad person. Doesn't mean that, you have a severe disability, but some things will take you a little bit more time to kind of pick up and figure out. And so I try to tell people, figure out what your plan is for when you turn 70 and 80 while you're 40.
Yes.
While you're 50, and you can jump around a little bit with some folks. But and that's why, we have to protect our seniors, because there's so many predators who talk real fast. What they used to call them, I just saw a video about and somebody posted a video from the early 1900s, snake oil salesman.
Oh, that's what I said last night in my message I sent to you guys.
And then
that's what they are.
But then I saw a TikTok video saying that John D. Rockefeller's father was the original snake oil salesman.
I believe it. I absolutely believe it. I'm gonna let you go finish up your points, Kimberly, and before I start asking some additional questions.
Yeah, I got just about two more I think are valuable. That little known, what you may think of, what you may not have think of. The Augusta rule. Now that comes into play when you have a second home. A second home that's a vacation home, not necessarily a rental property. You can rent it out for up to 14 days tax free. So think about it. Rihanna just did the Super Bowl. Did you hear the story? And the person house that she stayed in Arizona for however many days, I think he got $500,000 for the week.
I think that's what it was.
Wow.
Of course he's gonna pay taxes on that. I think he's gonna pay taxes on that income. But you have up to 14 days. I have that part I'm gonna get back to you on. Does the income matter? Because it was just a weekend. He got $500,000 rent from Rihanna.
Right. So
I'm about to start renting my house out for 14 days a year.
So
I mean,
imagine like Airbnb, you can do from 200 to 1,000, depending on how beautiful your location is, up to $1,000, $1,500 a night
So you
sometimes.
said this is this a second residence or your vacation home or your primary residence?
Um, I know people that have done it in their primary residence
Okay.
as well, but it's really supposed to be not your primary residence, not your home. So as long as your home, okay, as long as it's not your primary place of business. So, like for example, how people utilize it for their personal home. I'm a business owner. Say I have an office. I can hold for 14 days or 14 times, 12 times a year, hold meeting for my corporation, my minutes meeting in my home, rent for the day, whatever space I utilize. If it's there's an office, I do have a home office. So say this wasn't my primary place I conducted business, and it is. I had an office location. I can rent, call myself, giving myself $500 every month to conduct a board meeting at
wow,
the
that is
location.
absolutely awesome. So, for instance, if
I'm having a
you
board meeting tomorrow. Y'all want to come?
Somebody minutes. Somebody gotta take the minutes.
somebody got to take
Somebody
the
take the
minutes.
minutes.
Oh yeah, yeah.
So you can have your meetings in your home if it's not your primary place of business. But in an instance of a vacation home, it's like what people traditionally, that's kind of what Airbnb was. You could
Yeah.
rent it out, short-term rental, and up to 14 days for the year, it's rent free. The income you made for 14 days can be rent free.
Wow.
Wow.
So I
That
think I've got to look at the law intently. I want to know if that's going to be tax free for that man, because I want to go wherever Rihanna's going to be next. I want to invest there first because
yeah, because that's that would be that's a great question. I think that you asked Aaliyah. Like, how do you determine? Like, is there a maximum or per day or something like that? Because if that was less than a week, so that's less than 14 days.
so it kind of qualifies though, So it's like, okay, wait a minute, that's a whole lot of money. I'm even saying, wait a minute, that's a whole lot of money. But that's what people do. If you think about the people that live near sports towns, that
Mhm.
those type where they have events, and people are now not wanting to have the hotel experience, or oftentimes hotels are sold out. So what they do, they look on Airbnb and look for a home.
Yeah,
So people are making, you can make tax-free money
look at
in
that.
that instance. So
We like the
that's a
word tax
strategy.
free.
Yes, that's strategy. If you are not employing that, figure out how you can.
Mhm.
The last one I want to kind of put out there that people don't think about is when you have a dependent, it's a childcare strategy. And as you guys know, there's a childcare credit that you get. And I believe the maximum now, we had a good year last year, but the maximum now is 3,000 for one child, 3,000 each child, 6,000 for two. Um, you can also have a dependent care flex savings account at work. So
Mhm.
much like the HSA, you have that too. So I don't know about anyone else. I have two. They're teenagers now, thank God. But when they were in childcare, that expense could be well 9,000, 10,000, 15,000 a year.
Yeah,
And if
that's a lot
you're
of money.
capped at maximum for two, 6,000, look how much is left on the table. But what if you use a combination thereof? What if you invested, if you have that available to you, the Dependent Care Flex Savings Account, which is a max of $5,000 of tax-free money, and then you have the $3,000 or $6,000, depending on what your family structure is. Now, my eligibility for savings, tax savings, went up to from three. to now 8. So
Okay,
if I spent $9,000, I'm almost getting back my full amount.
okay. I see what you're saying. So you file your tax. So you, let's say a family makes $100,000 a year. They have 2 kids. They pay for childcare, and then they pay for it from tax dollars that's already been taxed. Then they
Mm-hmm.
put it. They do this account. Is that how you set up
Mm-hmm.
the
Mm-hmm.
dependent care account?
Mm-hmm.
And then you pay for it from the dependent care account. Is that how it
Yep.
works? Okay.
Yep.
Yeah.
Yep.
Yeah. Okay.
So you
And that,
have that, you have those two, that combination, and now you increase your potential of tax savings.
yeah.
Wonderful.
So there are strategies out there. You just gotta look at your individual picture, what you're eligible for, and see, what's applicable in your case. What your goals are, what's applicable. Do you want to be aggressive with strategy, or do you need to be middle of the road strategy, or you have some big things you want to do? And strategy probably needs to be on the mid end or to the lower end in order for you to qualify for your goal and dream that you are trying to attain. So, always in the mindset of what your goals are for the year, you approach your tax strategy.
Yeah, very
And it's
Great
like
good.
a medical
information.
appointment. You need a checkup every year,
Great
So
if
information.
not multiple times.
what are some of the tax strategies that you've seen with some of your clients that you feel like are effective, or tax
Um,
strategy or goals that they've had that you've talked to them about and you're like, oh, that's an interesting goal, but and that might work. You're like what they're trying to do.
um, I've utilized the Augusta rule on some of my, because I have a few consultant clients
Mm-hmm.
that have like a unique niche, and they make a lot of money
Mm-hmm.
and low overhead. Because of COVID, they might have did more in-person strategy. Because of COVID, the world turned virtual, so they pivoted. They did a pivot with the COVID, and
Mm-hmm.
now they've adapted. I've seen them go from, oh wow, I was making money. They took a dip in COVID because they were more effective in person.
Mm-hmm.
They couldn't figure out how to translate that. Then when they figured it out in the 2 years that we've been going through COVID, they exploded. They made more money than in person.
Mm-hmm.
So, but with that being said, the structure of your expenses change. So
Mm-hmm.
you're very low overhead and you're making all this money. So, strategies that I've employed with them is like the Augusta rule. Definitely is one that we use. You just have to look at what's going on for them, and oftentimes I find my consultants, they are strong millionaire ladies that haven't had families yet.
Mm-hmm.
They're young, or they Gen Z-ish, and they found a niche, and they're making that money. And you just have to kind of look at each picture individually. There's some staple ones you can apply and make sure they set themselves up to apply,
Mm-hmm.
to take advantage of home office deduction, which are standard. The Augusta rule is one. If they are a consulted single person, I tell them have minute meetings at their home. If they are a corporation, you know, um, there's staple ones, but there's ones that, depending on their picture, like there's some high earners that can afford to make, there's a certain charitable deduction. My mentor, every mentor should have a mentor. That's another thing I'm going to say.
Mm-hmm.
Every mentor has a mentor, believe it or not. So my mentor that's into tax planning, she's a guru into tax planning. I've seen her apply this charitable deduction that's like a mineral you buy. It's a certain one that if you invest, kind of like the life insurance, it creates a bigger impact.
Mhm.
So if you invest like $10,000, you get a $20,000 credit. It's like the credit charitable deduction, because the value of the mineral or whatever it is goes up, you get back a higher credit. And that charitable
Mm.
deduction is ridiculous. You know,
What? I'm
yeah,
about to Google
yeah.
that right now.
There's
But it's so great to understand some of those things. And some people, you have, if you don't know any of these strategies or whatever, you can be leaving money on the table, because just like for the regular earners, or a little bit mid to high, they can utilize the things like the Roths and stuff like that, because you have to have the money to put it in. Oh, by the way, I know you didn't mention this, but if you didn't file your taxes as yet, you still can invest in that Roth for last year. So if you got money that you want to be able to take advantage of that credit, or deduction, you can still do that. And I think we are able to do it up until October, right? When if you file an
no,
extension,
hold
correct?
on. No, I don't think so. I think it's only till April 15th. Hold on. I'm
Okay.
going to tell you. I might be wrong, but I'm going to tell you. Yeah, you have only up until April.
Up to April 15th? Okay, I thought you had up until
Mm-hmm.
October as well. Um,
Mm-mm.
but those are things. So now for the higher income, so you put up your $6,000, but you still want to get some. This is when we can do this mineral kind of thing, because you made so much money and you need to put that money somewhere so that you're not paying taxes on all of it.
Yeah,
Awesomeness.
those are strategies I would employ. Either that high that special charitable deduction, or even like um the be your own bank if you have the flexibility. Why not?
I'm gonna need you to find the link and tell me about the special charity.
I am going to
I'm gonna
share
text
it.
you a mail one.
The name is escaping me right now, and yeah, it's escaping me right now. There's a specific name to it, and it's not coming to me, and I'm embarrassed that it's not, but I will
Oh
share it.
no, there's just too much information,
It's
so many things
overload.
right
It's a
now.
lot of
Overload,
information.
yeah.
Mhm.
Especially right about now when we're in the thick of tax season and
Yeah.
stuff is going on. So definitely understand.
Well,
This
let me
might be
ask
you
Definitely
you
guys,
two.
understand.
right?
Let me ask you two tax professionals this. I know the answer, but I'm gonna ask. So, if you think you're gonna owe taxes, should I
She's a
file an
lawyer.
extension or should I get my taxes done now?
Say
To
that
do what?
again.
If I think I'm gonna owe taxes, should I hurry up and get my taxes done by the 18th or should I file an extension?
You should file an extension, but you should pay a projection on what you think you owe, so you
Yes,
avoid the tax.
because
Go
penalty.
ahead,
Some of you,
speak.
you
I
if you
mentored you. You're gonna speak. Go ahead. Go ahead. Tell
right,
us.
if you depending on how much you owe, the government is going to charge you for underpaying. They ain't playing with you. You guys, everybody who want a refund, talking about I'm looking for a refund. For most of you people, especially you higher income earners, that means you paid too much taxes and you gave the government a free loan. The government ain't playing with you. They're not giving you a free loan. Depending on how much money it is, you not only will have to pay interest, but you can have a penalty on that as well. So, like she said, yeah, file an extension, but pay, what you think you would have owed. And I'm glad for that. As we're talking also about regular people, right? Can you talk about some people who have multiple jobs or multiple gigs and side jobs and things, like right now people are doing lots of things to bring in money, and then they are surprised at the tax bill. But talk a little bit about what they should do with those W-4s and the projected income they think they're going to make. Talk a little bit about that so that they're not surprised at the end of the time by this huge tax bill.
Absolutely. There's a couple of things that I would say I'm even guilty of that have gotten us all in trouble. Younger, somebody, did it or whatever. They wanted to take home more of their check when they were getting, like, they worked a lot of overtime or something like that, and they messed with the exemptions.
Mm-hmm.
So you at home with you, your dog, and cat, and they put five people to be exempt for. Yes, you get the reward now, but you know when you go and pay the piper? When it's tax time. Because when it all comes out in the wash, those five people don't exist, and taxes are going to be calculated on your total income. So those things, always review what you have on your W-4. So when you go in there, really read that form. I encourage people, don't just check a box, put down a number. You just assume a number. It's me. I'm, a single mother with two kids. I never filed three because I know when I filed three, I always end up owing because my income fluctuated with overtime when I was a corporate person. Um, I filed two. I always filed at least one less or zero if I can manage on zero. Because zero, they take out the most taxes. And
Mm-hmm.
if I'm looking for something at the end of the year, that's when I want it. But you know what? The goal is to break even, people. Stop looking for a refund.
Yeah, the break
Stop
even
looking
is the
for a
magic number, and that's an
refund.
art. Trying breaking
Yeah,
even is an
break
art.
even is the goal because one, why are you giving into taxes what you could use during the year? If you are at a deficit, I would want what is maintaining me, or I can put away for myself and make the choice of what I invested in,
And get some
Mm-hmm.
not pay
interest
the
on it.
taxes. And then at the end of the year, if you pay too much, you're not getting interest on that money.
Mm-mm.
You done help the government do whatever, and you're not
Exactly.
getting interest on that money. So break even is always the goal. So read that W-4. And sometimes if you found that you owe and you think you had zero, I've had where payroll made a mistake and reverted to something in the state and put one on the state and I end up owing, or put something on the state. Review every year, make it a habit. After you pay, do it like when you submit your taxes. After you get your taxes filed, ask your job to review your W-4.
Yeah.
Read the form through.
Should you look at your W-4 when you get a raise?
Absolutely. Absolutely, because you might want to put some more in. Because if you already know, say you're already claiming zero, if you're not at zero and you're at one, you might want to go to zero. If you're at zero and you're getting a raise and you don't have a chick nor child to any credits, yeah, you could apply strategies. You might want to put a little $100 in. That's a case that you might want to put a little bit extra just to cushion so you don't have the impact. The goal is to break even. I'm not
Right.
trying to get $1,000.
And
I'm not even trying to get $1,000. I don't want
Right.
it. I want my money during the year.
Right.
But the goal is if you are in a position, and one time that happened to me, I got a 23% raise because of, I helped with a division they were letting go, and I helped manage it to the transition, the mergers and acquisition, the agreement. I helped manage it, and my corporation awarded me with a 23% raise, and I was glad to see that bump in money. I was not happy at the end of the year.
Mm-mm. Not at all.
Yeah.
and that's a good thing also for people who, if you have more than one job and you claiming all the same exemptions on all of those jobs, and then you might have 1099 money, meaning money that you didn't pay any taxes at all on, and you then you have that also. So consequently, you can end up not paying taxes on $50,000 or more in that year.
So that's a key thing. When people have multiple jobs, especially multiple 22, we always walk into the job and just consider that job. That job is also just considering that job. So when
Right.
they look at the income they're paying you, they're thinking they're in a silo. This is the only income you make. When you already have your job, you go to a next job, there is a section that asks, do you have more than one job? Please put down the projected income you will make at that job. Yes, it will take out a little more taxes, but guess what? It's accommodating that it took that figure. Say the other job you had 25, you're making 25,000, and this job is going to be another 10. Guess what? They're going to factor it based on 35,000. So that's it's taken in account both income, because if you say right there that this is my only job, they're only taking out taxes on $10,000 when you have a whole other job that's $25,000.
Mhm.
That $10,000 in combination with that 25, you might not be paying enough.
Right. You might be even in a higher tax bracket.
Mhm.
So yeah, that's a good a good thing that I wanted to get out there, especially our young people. They may not understand that's what they're doing. Of course, after the first time, they'll get a wake up call. Can you talk a little bit about this? Is the whole rage on the internet? You have a business, and can you hire your kids, and how you do that?
Oh, absolutely. Absolutely. If you are so when they say that you have a business, it's you can hire your kids. You can hire them up to the standard deduction amount and they don't pay taxes. So anyone making lower than the standard deduction, you pay almost nothing. They're not going to pay tax as your children employee. They're going to pay into their Social Security and Medicare costs, even though the myth or legend is that it won't be around when they're there. But they
It'll
will
be
pay.
low. It'll be around, but it'll be a lot lower. It won't be what
Yeah.
they paid into it.
Yeah. So and they get the money tax free, but the key to that is you can't just say you paid them. You can't just put in a figure on your tax return. I always coach my people that want to do that, and I do it. Create a job post on the responsibilities you're giving that child. Make sure they execute those responsibilities and they have to be age appropriate. So you can't have a 5-year-old and you're talking about they filing and they doing well, they might can well, no, it's not a 5-year-old. 5-year-old is more like a model on your social media. If you sell clothes and you put them in the clothes. You pay them $5,000 for the photo shoot. That's reasonable. You can have a monthly photo shoot. That's reasonable. um 10-year-olds, 9, 10-year-olds, 11-year-olds, you might have them filing. My 13, believe it or not, my son could do taxes from he's 10. So he input for me. So he had a legitimate job. He had a job. But the key is that you give them that money as well.
Mhm.
So they have to have a separate bank account. You have to issue them a paycheck or make a transfer to their account, not your account, not a joint account with mommy, their account. Um, it's money coming out, I know, but you think about it. So now they're employed, they have what, 10,000, 12,000 in a bank account from payroll from your business. Guess what? It's legitimate to have them buy their own school clothes. It's legitimate to have them do certain things out of that money. You can offset some costs that way.
What about your
Not
You know
saying
grand?
that.
what?
Go
What
You
ahead.
about
know
your
what? That's
grand?
legitimate to have them do as well. Start putting that money away and
Make
getting
investments.
compound interest on it. Whether
Make
I was
it
about to
is,
say, if they making that kind of money, they need to start planning for retirement now because we got to
oh,
plan for
of
our.
course,
Absolutely.
They gotta have this money, have this time, like you said, to compound over time. Because if
yeah.
you're able
Absolutely.
to do it, because I was gonna say, can I hire my goddaughter to be an employee of my business?
Absolutely.
Oh man, I'm about to call her now. Tell her she's hired. She's
But
only
I have a
2 years old.
question too. I have a question too. Like I have a granddaughter, very smart, but
Mhm.
can I hire her?
Yeah. The money you pay her can be tax free up to the standard deduction. So
Hmm.
a standard deduction for a child is for a person is $12,000. So fair to
But
give
she's
them
not my dependent.
it's you're not getting the expense in your business. You paid an employee.
Mm,
That's how the
Twelve
credit
thousand
applies to you.
dollars.
mm.
So instead of putting it in a stock account, I could payer. Okay.
Well, you can do both, but you now get the expense deducted because you put it this way: you pay the child and then you put it into the stock account,
All right.
Oh man, my
or then you
goddaughter's
put
about
it
to be
into
Well,
individual
five
your
business.
years.
goddaughter, I have to look at that per se. It's really your child.
Well,
Granddaughter
I
would
ain't got no business.
definitely fall into that category, but
And it's not
yeah, but
taxable to them.
it's not tax. They're not
But
gonna
you still
tax it.
got to do a 1099 once it's over $600, right?
Mm-hmm.
Yeah.
You're gonna do it, run payroll, because
You got to run payroll.
you
That's
want
right.
invest in their you putting them on payroll. You putting them on payroll.
Hmm.
So you want the Medicare and you want Social Security paid into for them.
Yeah.
Okay.
Mm,
Yeah.
That's how you
Very
start that
good.
early for them.
I like it.
Yeah, imagine if a kid is putting away $6,000 from the time they're 6 for 30 years. Well, not even 30. They probably get 60 years now. Look at that kind of money that they
That
get.
that is golden because we give our kids all this stuff. And if you're in business and you're real business and you have a company and you need legitimate expenses, put it's and I hear it all the time. It's like Carmen says, it's all over the internet, but they
Mhm.
don't explain
They
the
don't. That's the
strategy.
thing. It's a legitimate strategy, but what's the crime is that it's more of clickbait.
Right.
Instead of, it doesn't give you, there's things. And what I don't like about it is that, so you're going to have the layperson who's going to go do their TurboTax. They're going to say, okay,
Right.
I gave my kid this amount of money in pay. One, they didn't transfer it out their bank. So if they get audited, you know what, you cause this person to get a problem, a real problem, because they
Right.
don't have it documented what they are. You almost want them to clock in, clock out, even if you have it on a spreadsheet, what time they started to work, what time they ended work. They work 2 hours a day, they work this amount a day, they work 4 hours on the weekend. You want to keep records of what they were doing down to the job posting, just like if you hired a real employee, a job posting.
Right. What can
And
you
you know
prove?
what?
What can you
You know
prove?
what? It's
Mhm.
important that you just said that because I'm going to mention that you need to make sure you're not violating labor laws. Kids can't work 8 hours a day. Kids cannot work during school hours. So
Yeah,
those are things you got to make sure that you can prove is happening. You can't
but
just
if
pull out numbers out of the air.
it's a family business, should be reasonable, but it's a family business. So I guess, our children could be slave labor, but
But that's
it's
it. That's it. Then you'll be violating some state child labor laws because kids can't. And there's some. I don't know if y'all saw it just recently. There's some chicken companies and stuff like that got
I
kids working
saw
all
that.
night,
I
all
saw that.
night. They're major, and they've chosen to do it because the penalties that they face is less than
The
what
money they
they
get.
would be they would have to use to pay out. So they don't care, you
right.
know. But
So what,
for
you know why?
us,
Because it's how they try to avoid that is because as an employer, when you pay payroll taxes, and let's take the child out of our head,
right?
employee for you, you are holding for their taxes. It's not our taxes. We're holding it for the government. So their taxes, that's why they just get their net. We take out the taxes, but we are stewards. We have to give it to the government for their payroll, but we also pay an employer tax. So those are the two taxes we pay. So sometimes if they even make small businesses, the trouble that we are finding is that oftentimes they don't pay the payroll taxes.
They don't.
Mm.
Yeah.
Listen, my mom, we are immigrants from Guyana, South America. And for years, my mom worked and they did not pay her taxes. You know what is done? Now she's unable to qualify for Social Security because she's missing certain credits. And these crooks did not pay into the system for her, even though they took it out, right?
Wow.
Wow.
Mhm. And so even I'm happy that we are doing things like this because people can listen, people can hear, people can say, "Oh wow," make sure they can make sure that these things are happening for them. And if they're becoming the employee, they're making sure that they're doing some of the right things. Although we are just giving educational advice on
Yes.
here, we're not giving anything that's specific to you.
Well,
Yes.
and I think, and I like what you said, because I think the thing too that came to me is with a lot of our millennials and Gen Zs and whatever they're called now, the Alpha generation and all them, they're all starting businesses, and I think the idea is, to really get them to understand that it doesn't matter that you don't pay. It doesn't matter that you just started your business and you're a sole proprietor and you don't have all the official paperwork. You still got to pay taxes and plan to pay taxes on that. And I heard some really bad advice, some bad information that some relatives of mine were like passing around. I was like, that's not true. Like, well, if you start a business, you don't have to file taxes for 3 years. I said, in what world, like what planet does this happen?
No, you know what it is, and
You
just
don't have to
because
show a
it's
profit.
CPA behind people's name, it's not always great advice they give, because CPAs doesn't mean they specialize in taxes.
Right.
I've come across many a bookkeeper, many a business, excuse me, that they got the advice of a CPA that did not file the business. And the CPA could have been involved in them starting the business, or a lawyer, they started the business, they knew about it, told them they didn't make money this year. Don't worry about it. So when you didn't make money, some sort of mindset out there is that don't file the taxes. It is not true. Even if you just started the business, the year you started a business, whether you did nothing with it, technically you're supposed to file a zero return,
Yeah.
because IRS is looking for that tax return.
Yeah.
You started a business, it's a pseudo person. A corporation is actually a person.
Right.
Yeah.
A corporation pays its own taxes. A corporation makes money, pay taxes. You understand what I'm saying? If you're in the business of making money, taxes are due. So a corporation is actually a person. Any other entity, a LLC, S corp, a partnership, that's you doing business activity. It's a pass-through entity. It has some legality to it. You register it, you give it some body, because it's supposed to give you some sort of protections, or else everybody and their mother would sue you. But what you don't escape is the tax impact.
Right.
People hate corporations, starting corporations as smaller business-minded people, because you have double taxation. You pay, the corporation pays its own tax. If you take out any dividends as a shareholder, you pay taxes.
And then if you pay the income, you pay taxes.
Right. Nobody wants to pay taxes, basically. But you know what? A corporation, especially if you're into, it's a high earning corporation, you protect yourself personally from paying that tax. If it was any other entity, I like corporations. Yeah, double tax, but you can control what tax you pay. Any other entity, which is like a LLC, a S corp, a partnership, that money, if I made $1 million and all at the end of the day it ended up being 200,000 net income, guess what? As a LLC, a S corp, a partnership, I cannot avoid the tax on the $200,000 personally.
Right.
As a corporation, that corporation paid tax on 200,000, and if that corporation can't afford it, that corporation can die with that tax. You
Right.
understand?
Right.
You can have a corporation part 2. You can have a next child and then resurface and let that corporation die with the tax debt.
Right.
But if it's any other entity, I'm personally responsible for the tax.
And I think this conversation is important because there's so much half information, and it shows up in all of our social feeds, right? I know, because we're in the financial industry, so we get all the stuff that we already are interested in, or we're doing or talking about, right? And I'm like, where's the rest of the information? And the thing is that we all put disclaimers out. This is for information, education. This is not specific to you, but even if it sounds specific, make sure you talk to someone one-on-one. But the thing is that so many people are literally taking advice
social media.
from the exact social media. And I won't say a name, but I had a friend and I've known her for years. She literally called me in the middle of a transaction to buy some I-bonds. She's like, help me. I was like, help you what? She's like, I'm trying to buy some I-bonds. I said, what are those? And she's like, well, I saw this video and she said that today's the last day and you had to do this and that. I said, well, send me the video. So I looked at the video. I said, oh, okay, that's interesting. I don't have enough information to go and rush and try to buy one of these like right now. And like today's not the day to call me for financial information. Like right when you're in the middle of doing it, right?
Right.
And I think that we get into this last minute thing with most of the things that we're doing because I feel like and we're on this journey together, right? Trying to educate people so that they can at least meet with us so we can give them their specific, information. But what happens is, the literacy gap, and I hate the word literacy because it sounds so negative, but the lack of knowledge about money has been passed down to us for so many generations. The first, couple 10 generations, it was out of our control, depending on where you're from and all those different things. But then, then it's just us learning how to work, earn money, and pay bills.
Yep.
Right? Work, earn money, pay bills. And so we don't have the conversations at home. And so the education becomes what we saw. Right? I grew up with my grandfather. He was a truck driver in New York. He and what did he do? He was a Southern boy who was in New York for many moons. And guess what he did? He got up every day. He left the house at 5 a.m. He went to work. He was home by 3. He paid bills. He hung out with his friends, and he did that pretty much every day. He retired as early as possible, right? And that wasn't good for me. I was a teenager when he retired, so he was watching me, right? But the thing is that he was able to retire. But the lesson I learned is that, okay, well, you go to work, you make sure you keep your job, you make sure you keep your home and stuff together, you pay your bills, and you do it again. But there was no, and not a discredit to him. He showed me what he knew how to do because he was able to maintain everything in his life. There were no financial shortfalls. There was nothing missing, type of thing. And then it's like, okay, well, what is the real lesson in money? And you start looking around to other people in your family. Well, what are they doing? How are they doing it? And then you start to learn these different things like, oh, well, Uncle so-and-so has a retirement plan. Okay, well, they have this. Oh, they were in the union. They got that money and they got the retirement. Oh, they did this. And so the thing is that we're allowing, or many of us, I'm a Generation X, many of us just tried to learn by watching and mimicking what we saw other people do. And now these newer generations are watching social media to try to figure out what to do. And the information is just all over the place.
Mm-hmm. And we didn't even, and for most of us, money wasn't, people didn't talk about money. It's taboo. And so many of us that are trying to mimic, we're trying to mimic half of the story.
Right.
We don't have the whole story. And that's the reason why we're doing things like we're doing. But, I really want to respect your time, Kimberly. And I know that I told you it's going to be no more than an hour. And we are way past an hour. Well, not way, but we're past an hour right now. I really, really thank you for coming. We have to have you back when it's not tax season because we did not touch the surface of stuff in here. So we definitely will need to have you back. Tell everybody one more time, or did you already put it in the chat how they can get in touch with her?
I put it in the chat like 9 times by accident.
Okay, so already in the chat. How you can get in touch with her. She's located in New York. So if you are in New York, although she does taxes in all 50 states, and if you didn't catch it, she has a niche in taxes, which is for legal cannabis industry. You're wanting to do that, want to figure out how to get your taxes well in that industry. She is the guru. Don't call her yet. Wait until after the 15th, although our taxes go on all year, right? If you expect that you are going to get a refund, you don't have to file by the 15th. But if you are going to, you better go ahead and file an extension. Anyway, thanks so much. You guys have any do you have any parting words, Kimberly Ann?
I want to say information is power, and that power is key. I definitely want to speak to our younger generation. Of course, we are at a stage that we are just trying to set up our younger people right. Our younger people are so curious. That's why they all fall for the trap of what's on social media. It's just to really continue what this platform is doing, continue to put positive and good information out there for people to learn from. It's very important because what they get is a snippet, and how we are structured now, unless it's on social media, it's not true. They're dissuaded by the news, which we grew up on, and
Yeah.
what we live by. Now social media is what's gold for the younger generation. So the fact that you are doing this is very important. And if you don't know about taxes, it's one of the most important things um out there to begin to know about,
Mhm.
no matter how young. So if you're in high school, um it's start asking your parents questions. Start, getting that exposure. And parents, start exposing your kids. We come from a culture that, we're seen but not heard. But you know what? Lay out your tax. When you're doing tax, if you're a TurboTax, I'm not a proponent. You need to find a professional. If you are a person that, do it yourself, bring your child and involve them with it. My kids can speaky spokey tax all the time. They know their debits, their credits. They know what revenue, what income means, what it's like, the experience, the journey I've been on as an entrepreneur. They very much involved in it. So exposure, information is key. So that's what I wanted to share.
Wow. Thank you.
Oh gosh, thank you so much. And she just said it's not that TurboTax and some of the other things that you can use to do your taxes doesn't always do you a good service. It might be doing you a disservice, because if you don't know what the things are that you should be looking for, it's not going to just tell you, right? The government will take whatever tax you give them. They're not going to say, hey, you're not supposed to pay
Oh,
this.
you
So
you miscalculated that. Oh,
yeah, they're not. No, they're not. But if you don't pay them enough, they're coming after you and they're going to penalize you as well as interest. So it is important that you do speak to someone, because there's just so much you didn't know. And if you didn't file your taxes in the last couple of years, the last 2, 3, 4, 5 years, please reach out. Anything new, anything else, Saran and Aaliyah?
No, just thank everybody. That was very interesting. Thanks for joining us this evening.
thank you
Yeah.
for having me.
Yeah, thank you for coming, and thank you for looking out for me on that those taxes we did together. So I could be I'm a reputable client. She helped me do some taxes and she was timely and we got it done.
Thank you so
Yeah.
much. Thank you.
And that's important, because she has got so much tax knowledge. And many people might not know, if your family member died, a tax refund needs to be filed in that last year. So if you need help with something like that as well, reach out to Kimberly. And Kimberly, and again, thank you so much. Everybody else, thank you for joining us. And if you
Thank
catch
you
us
for
on the
having
replay,
me.
please hashtag replay and share this live. Bye bye.
Bye
Thank
bye.
you.